Hello guys, I'm Subayal. Meet Kevin, who is one of the biggest finance YouTubers, has been screaming that people should go and buy the dip religiously and that he is not selling, expecting that the stock prices will keep on going to the stratosphere. This is what he said in one of his recent videos.
It opens the door to the thought that, well, maybe we should be building our stock portfolio in stocks that have maybe started hitting some bottoms.
And then right after the video, he did some very complicated in-depth analysis that completely and miraculously changed his viewpoint in the blink of an eye. He took a U-turn and told everyone to sell.
I've sold 99.15% of my stocks and my entire crypto portfolio. Of the cash that I have right now, I am 5.56% short the market.
And this is catastrophic since he has millions of followers, and in just first day, hundreds of thousands of people watched this video. And he did not stop there, but also mentioned on his Twitter account in a very straightforward message, sell. This is very dangerous since firstly there are just two possibilities. Either he already held that point of view or else he didn't believe in what he was telling millions of people in his videos. One of these possibilities must be true, so he simply cannot be trusted. And secondly, his investment videos are incredibly dangerous since the probability of you making great losses goes up tremendously when you sell your stocks that are already 30, 40 or 50% down. The worst thing to do in investing is to make your paper losses real when the market is taking a nosedive and when one is panicking. This is extremely terrible and pathetic advice that his millions of followers got. And remember that Meet Kevin sent this tweet only when the markets were already closed. He sold out of his positions when the markets were open, but only informed his followers when the markets were closed. How pathetic business ethic is this, and how low this is of him as a person that he chose to front run his sales and only then told his followers that he has done it. And maybe he thinks that it was morally fine to do that, but this is not all. Literally, all the way up to this point, he was telling everyone to buy. 3 days before this video went live, this is what Meet Kevin told his followers.
This is a signal of the bottom. Be careful with margin, but I am bullish on this market. I'm not going anywhere. I'm not effing leaving.
To me, this is like showing the middle finger to all the people who trust him. Since he tells his followers to do one thing, and when they are busy doing it, he is doing exactly the opposite in the background. So the day he was busy in selling all his positions in the market, his followers were unaware and doing the exact opposite and buying the stocks as per his advice while he was selling the same stocks behind the door. Meet Kevin should be ashamed of what he is doing, since this is totally unacceptable and pathetic. The real problem is that these charlatans started investing during the biggest bull run in history, where you could have literally invested in the dog coins, and even that would have made you a lot of money. If you had sold your dog coins before the dump, of course. A confident fuck you all to his subscribers. And the story does not even end here. He literally doesn't even care if you are subscribed to his channel for years. So if cheating his subscribers by selling stocks in the background was not a good enough insult to his subscribers, he did not stop there. An even bigger insult to his subscribers came when Meet Kevin mentioned a dozen of times in his recent video that his viewers would have known that he was going to sell his positions on the day he was doing it only if they had bought the $1,000 course which he is selling. So it means that without paying for the course, his subscribers will be cheated and disrespected. So if you are a loyal fan of Meet Kevin who has been watching the channel for many years and trusted him, remember that you could get screwed anytime until you buy his courses. If you don't buy his courses, you will be deliberately misled, cheated and insulted. Shut up or fuck off. When the market bounced back since Meet Kevin sold his stocks, his subscribers got very upset, and that is a natural reaction. And at the same time, Meet Kevin kept on making videos many times a day about his market crash thesis that the market will be surely obliterated with 100% certainty, while the market was busy doing exactly the opposite. And it is natural that the comment section got filled with comments from his subscribers who were getting quite frustrated and annoyed. So then Meet Kevin turned off the comments on his videos because this not only solves the problem but also serves his delusional thesis and ego. And during this time he was broadcasting the same chatter that he definitely knows that the market is going to crash. Meet Kevin is behaving like a deer in the headlights with a mental state of high arousal caused by anxiety, fear, panic, surprise, and confusion. And not knowing what to do, he kept on broadcasting his episodes of doom and gloom dreams, hoping that things will turn out as he was saying, so that later on he can proudly announce how right he was along the way. And if the markets go up, and if he does not buy back in, and the market goes in a massive bull run, it will tear the reputation of its channel to shreds, since it won't look good for an investing channel. But I don't have a slightest of doubt that he is very cunning and he will twist and turn the story to make people believe that he is an investment genius. Remember that in panic, people take irrational decisions. If someone tells you that the market will go in a certain direction, never ever base your financial decision on these predictions. If YouTubers tell you that the market will go in a certain direction, including me, simply neglect it, since it shows the incompetence of self-proclaimed investing mavericks. And now the dangerous trend on YouTube. There is a growing trend here on YouTube that people are declaring themselves to be investing geniuses. It is getting very dangerous now due to the uncertainty that has swept across the markets. These finance YouTubers are nothing more than a group of shill monkeys who are telling you to time the market, and they know exactly what the market is going to do and when it is going to do it. But the problem is that they are full of crap and are mean and cunning exploiters who have no moral constraints, as we just saw. They tell their millions of followers to do one thing while they do exactly the opposite. I have to admit that most of the finance YouTubers have no background in investing. They have never worked in finance domain and have never been through a single market cycle in life to understand the market psychology and the worth of investing in long term. They started investing in the biggest bull run in history, where the prices of growth stocks and even dog coins went through the roof and where things were sweet and rosy. When this happens, people think this is a consequence of their intellect that they are making money so fast. Moral collapse of Meet Kevin. Attention is the biggest currency of today. You will get more attention if you have millions of subscribers on YouTube. And people naturally tend to watch more of your content due to the social proof that you have. But that does not reflect their competence in the area of investing. The problem is that if you have millions of subscribers, people trust you. And if you are out there telling them stuff several times every day, they begin believing in what you are saying and place an incredible amount of trust in you. Now, if the market crashes, you will see a barrage of self-praise and never-ending iteration of words that feed his ego. Like, I told you that this is going to happen, and you can see it now in front of your eyes. This is the proof. See, I am a messiah and I am a genius and I could never be wrong. How genius and amazing I am to predict the market, which is impossible to predict. Even Warren Buffett cannot predict which way the market is going to go. But I can. See, I am so amazing. I am the courageous macho man who predicted it precisely with laser sharp accuracy. In the end, what investing is and what it is not. And now I will tell you what I learned after over 2 decades of my investing journey. Remember that investing is not about timing the market. It is not about pinpointing with laser sharp accuracy the top and bottom of the market to sell and buy at the exact precise moments. The reality is that this is the best way to burn your cash in the air and lose a huge amount of money. Investing is not about creating a theory that something amazing has swept across the markets and everything will be like a paradise for coming 4 to 6 months and markets will keep on going up. After that, a storm will appear from somewhere and the markets will take a nosedive after that. I am the genius who has a crystal ball that tells me exactly and precisely what is going to happen in future, since I am so brilliant. To me, this is a stupid speculation and something that reflects how egoistic, stupid, pathetic and delusional the person is. I am sorry, I have been really straightforward in today's video. So remember that speculation on short-term market movements is the best way to lose money. The issue is that it is gambling at best, and many people who gamble don't discuss their nightmares in public and will never acknowledge how their short-term mentality has screwed them. Investing is about looking at the fundamentals of a company, and by looking at the past performance, durable competitive advantage, growth potential and other competitor players in the industry make an educational guess of its viability as a long-term investment. Savvy investors think of themselves as the part owners of a company instead of being at the mercy of emotional roller coaster of market volatility that mostly reflects the emotions of greed, fear of missing out, and the fear of losing all the wealth when the market is taking a nosedive. Good investors are like snipers who are looking for the opportunities offered to them by the market, and instead of being obliterated by the market volatility, they wait until the stock is trading well below the intrinsic value. If the price goes to a zone where the margin of safety indicates that the stock is a buy, they press the trigger and start accumulating the undervalued stock to leverage on the long-term growth of the company. Now, yes, there are lots of upcoming potential triggers that are not good for the markets. For example, one factor could be that Fed might start raising interest rates faster than expected. But then the market can also start going up, since over 80% of the times when the market's correct, it does not plummet all the way down to 40 or 50% drop, but instead it bounces off and recovers. So the markets are emotional. There are so many factors that are at play that it is impossible to be sure which way the market is actually gonna go. If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching this video. I really appreciate it. Please subscribe to the channel if you would like to see such videos each week. You all are awesome, and I will see you in the next video.